Welcome to everyone. This week video will cover the Dow Jones Industrial Average for the week of September 4th, 2023. Before we start, make sure you read carefully the disclaimer. If you like this video, please click on the like button, subscribe and click on the bell to make sure you don't miss any future videos. Let's start with the 10-day cycle. On the last week update, I was expected the market to rally and crossed above his cycle lines. On Monday, the Dow Jones crossed above his cycle line at 34,396, for a potential target at 34,763. The next day, with a high at 34,864, the market met his target. The success rate for the 10-day cycle is 100%, the low for this 10 days is expected today, Friday, September 1st. The next one, for the September 8th. The 20 days cycle. The last 20 days cycle occurred last Friday, August 25th. The next one is still scheduled for September 11th. On Tuesday, the market crossed above his cycle line at 34,609, providing a potential target at 35,190. Thursday high at 35,070 was only 120 points, or 0.34% below the target. This target is considered meet, since the high is within the 1% margin of error. But the target's still valid until the market cross back below his cycle line. The success rate for the 20-day cycle is 86.67%. The fact the market crossed above his cycle line confirmed the August 25th low was at least a 20 days cycle low. What's next? The market should at least find support on his cycle line. Here the support line and the potential target if the market cross below his cycle line next week. When we will know when the 20 days cycle peak is formed? When the 10 days cycle low is confirmed. I will draw the 10 days trend line, and when the Dow Jones will cross below this trend line, we will know the 20 days cycle peak is in formation. We have to watch carefully where the Dow Jones peak will occur, compared to the cycle peak. If it's happened on the left side of the cycle, then we can expect the market will cross below his cycle line. This will confirm the 80 days cycle is not over yet. See the 40 and 80 days cycle analysis. If it's occur on the right side of the cycle, then we can expect the market will find support on his cycle line. The 40 days cycle. On the last week update, I mentioned we have two options for the 40 days cycle position. The first one was the August 25th, was the 40 days cycle low. The second option, the 40 days cycle, was scheduled for September 28th. After this week rally, there is a high probability the second option will be the more valid. It looks like the market will use his cycle line as resistance. Here where the resistance lines will be next week and their potential targets, if the market cross above them next week. The success rate for the 40 days cycle is 100%. Here the two reasons why I believe the second option will be the more valid. The first one is, because after this week rally, it looks like the market will use his cycle line as resistance. The market rallied the first 4 days, after touching the cycle line yesterday, the Dow Jones start to decline. The second one. In this case, the market won't make a high higher than the August 10th high at 35,578. Meaning the Dow Jones 40 days cycle high was on August 10th, and this peak happened very early compared to the cycle peak, the red dashed line. We call that left translation and is usually bearish for the market. What's next for this cycle? If the Dow Jones do not cross above his cycle line next week, we can expect the market will decline until the September 11th, for this 40 day cycle is scheduled to form a low. The 80 days cycle. The last 80 days cycle occurred on July 10th. And the next one is scheduled around September 13th. The downside 33,184 and 32,893 targets still valid, since the Dow Jones is still below his cycle lines. We have the same situation than the 40 days cycles. The market moved toward his cycle lines this week, without crossing above. And looks like he will use them as resistance. Here the resistance lines for next week and their potential targets if the Dow Jones cross above it next week. The success rate for the 80 days cycle is 100%. There is a high probability of the 35,679 August 1st high is his 80 days cycle peak. If that's correct, then the Dow Jones peak occurred on the left side of the cycle peak. The red dashed line, which is bearish for the market. It's for this reason why I expect the market to resume his decline, to meet his target zone. If the market cross sharply above his cycle lines next week, this will mean there is a high probability the August 25th low is the 80-day cycle low. But it is very unlikely this will happen. The 20-week cycle. For now there is not much to add to the last week analysis. The market's still above his cycle line. Here the support line for next week and the potential target if the market cross below his cycle line. Any crossing below his cycle line will be bearish. The 40-week cycle. Same analysis than last week update, we have to keep an eye to any bearish signal when crossing the last 40-week trend line. Here the support line for next week and the potential target if crossing below. The 18-month cycle. As mentioned in last week in the update, we expect the 18-month cycle peak occur very soon. This is the end of this video. Thank you for following me. Next week I will publish another market update. If you like this video, please don't forget to click on the like button, subscribe and click on the bell to make sure you don't miss any future videos.